Good morning, video morning brief. I'm Rich Paz for Critical Point. By the way, for those of you who are still on the old website, this will be the last video update for you. Probably will cancel subscriptions day into tomorrow. And tomorrow I'll just give you audio updates for morning and maybe anything later in the day. After that, I'll be just hit and miss. Little free stuff and eventually shut down the old website. So you want to go to criticalpointpod.com, click on register, and pick one of three select subscriptions. You can only pick one. There's two individual subscriptions, and then there's a combined subscription, and new prices and lower prices and this and that. So anyways, get on board, and I thank for those of you who've already taken care of that and moved over. All right, let's get going to the markets. And last night, another big sell-off, and people were saying 1987 crash. Even Jim Cramer, CNBC, said, boy, he thought Monday was going to be Black Monday. They did put it down quite a bit, but notice this. This is a line just to remind me the start of this week. And notice the gap down to the next downside target. I didn't have that for you on Friday. It comes in last night. But I had that target before it opened. It opened right to it. I was so proud of that. Comes down a little below it, and then it kind of like bounces along here with this target here. And now it's back up to had been near the opening price, trying to fill in some of this gap and also be around this price target. Now it looks like it's starting down again. The next lower target is 47.24 for the June E-mini S&P 500 futures, okay? And that's where maybe we find the market finds its feet. It may have just found its feet. So let's first discuss some of this level 4 intra-week fluctuations. What we have is this is a level 4 right there. And this is a 6-hour chart, by the way. That's the business cycle. That's an up and down move of it. Then an up move, and the rest of it is just down, down, down. And that was the shocking moment of Trump coming out with such broad-based, deep, aggressive tariffs that people just said, oh, the end of the world's coming. It's time for recession. Sell, sell, sell. Okay? Now, the bottom line is the market should have bottomed Friday for the larger level 3 trend and no later. The level 4 was allowed to dip into the overnight trade. There's a possibility we have seen the level 4 bottom, but the problem is the level 4 top is now due. And I'm concerned it will go lower into tomorrow to the next day, but I can't rule out some greater stability, something a little lengthier, but I'm concerned they're just going to sell this some more. They're not done, but I think they're getting closer to maybe washing some things out. For the larger level 3, because it went lower today, the model throws out the idea of a level 3 bottom now, and it goes right back to where it originally placed it right there. We were right after all, and then changed our mind here and said maybe it can bottom, but at least I warned you. We had two different scenarios. And the one that's correct is that was the level 3 bottom. It got it right the first time. This was not a level 3 top, so this was disrupted greatly. And I thought this might be like the COVID market when this modeling on the level 4s, level 3s, and then a lot of the intraday stuff was bouncing around like 70 or 80% accurate, which is what it's done for many, many years. And so in 2020, people were saying, oh, we've never seen anything like this. But it was actually a very orderly meltdown. The model was quite accurate. I did quite well with it. This time around, I would say the model is more like probably 65% to maybe 78% accurate, depending on how you add up all these things that are going on. So just a little less accurate than COVID, but it does tell us there's still a little bit of order to this drop, okay? But it's also a bit different price story because it's entirely different economic fundamental story compared to the COVID. And it's a different story compared to 1987, yet we have similarities here of that crash, okay? And so far it's different than the early 2000s Y2K.com blowout, that crash, but there's still some similarities to it. And we may be in a miniature 1929, 1930s crashing moment here. This market may be going down 50 or 60%. This market may go down no more than 30%. And we're now knocking on the door of 20%. And if we still are in the decade-long bull market next few years, okay, then normally the market rarely goes more than 20% down. And in my opinion, has never gone more than 36% down, has only done that maybe twice per 100 years or 50 years or something like that. What it tells us, if we knew for sure it's up for the rest of the decade, it tells us that really, if you haven't sold by the time it drops 20%, you probably should just manage risk on a very short-term basis and not sell. All right. And I do believe probably it is going higher later this decade. How well does it go to a new record high? It doesn't have to anymore under Trump. We've destroyed some things almost permanently here. But my guess is probably will go to a record high towards the end of the decade. But there doesn't seem to be any sign to run out there and buy this, because if this is correct that the level 3 bottom was on March 31st, the next level 3 bottom should not show up to next week. So this market can go down all this week into next, and inside of that, it can go down now into tomorrow to Wednesday. But these level 4s are getting a little sloppy here, so I don't know how accurate that's actually going to be by the hour, all right? Now, however, last week I told you a level 3 top is due this week. Well, it is, but now since this is not a level 3 bottom, what it's warning is you're probably just going to see the market pick its head up sometime over the next few days, sometime this week, and yet might not have bottomed yet for that. So it could go lower still, then pick its head up, and maybe we're going to learn it does find some stability and picks its head up now in the next few days. But what it's warning is it ought to be back down by next week, and it might even be back down by the end of this week, okay? So yes, there can still be more downside into next week. There can be downside this week, all right, and there can be downside today and maybe into tomorrow. But at the same time, we're picking up measurements here saying they might be getting closer to where they've sold enough. They're getting a little tired of selling. They'd like to wait, maybe try something different, okay, and would rather sell on the way up or just hope and pray it really has bottom. This is the S&P 500 cash, and it worked very well for these targets, but I like the futures. I need to come up with more downside targets because it's obvious it's going there. Now today, if it was down 200 and some last night, but then was down only 90 about an hour ago. Now it's down 130, 140. It's all over the map. It is trying to find stability. I'm assuming we're going to get another gap lower in the cash this morning, okay? And if we're going to get another gap lower in the cash, then I think what we need to do is also consider that we'll have 3 gaps lower. Well, in my old commodity days, there was always a saying, if you have 3 gaps lower, it's exhaustion. You probably better not sell it. It may still not be the right time to buy it, but you better not sell it. I don't know how well that'll work, but I do think another gap lower this morning will even encourage some of the Wall Streeters, as well as the commodity type people trading stocks, that they'll say, you know what, we might be getting close to some kind of a bottom, some kind of exhaustion here. Now, the interest rate market still is actually trying to be a little buoyant, and it can bottom now for level 3 and rebound, and that may be a sign that, yes, the stock market can rebound. That might be a little bit of encouraging news here that they take a breather. Dollar's not telling me much of anything. I don't know what to do with that right now. It really ought to bounce into a level 3 top this week, so it's kind of in line with the stock market forecast of bouncing, but there's like equal scenarios of where it can be stable for weeks to come as well as just keep dropping for weeks to come. Gold market has really pulled back, but I think it can recover here, find some support here a little bit. Bitcoin actually was shocking me. This is a daily chart. It was shocking me how well it was holding up to the stock market. I've always said these Bitcoin people, crypto people, they don't know what they're talking about, and they seem to get, as soon as they get scared, they want dollars. They don't want crypto. This time around actually worked that they wanted the crypto, but now it has given in and breaking lower, and I got a feeling there's still lower to come into June for crypto, Bitcoin. But in other words, I just think it keeps down on this weekly chart like this, okay? And so, but it's possible it bottoms for level 2 and gives me more stability. I'm more concerned this is finally breaking down and it's kind of just dragging, it's lagging, okay, the stock market. All right, let's go back to stock market. Daily chart, S&P 500, actually doesn't tell me anything. We got 2 gaps. We're going to have another gap this morning. It might be time for a rebound. And you might be surprised how large and quick of a rebound we get. This is the Dow Jones Industrial, same story. This is the NASDAQ 100 futures. Even got gaps in the futures here. Okay, but it is due for a level 3 top this week. All right, whoops. Well, actually, that might not be a bad idea. putting it out there further. But, to me, it ought to go up and it ought to go down. And ideally, it ought to go lower still. But, we've beaten things up enough that we have to start wondering maybe it isn't smart to just always say lower still. All right, this is the S&P 500 equal weighted index. It's just obliterated. But here's some downside targets to watch today. Watch this week. You might want to write those down. So here's the S&P 500 futures. And what we have is starting today on into next week, we're looking for a level 3 rally. Ideally, it's probably over this week. So it can bounce, it can recover, and they're trying to turn it around this morning in the futures. Unfortunately, I can't make this a level 3. Now, I will say this market is so emotional, all right, so out of, going nuts here. We do have to consider maybe it bottoms one day later than it should have, all right? I don't think that's the case, but I guess if it stays up a little longer than I think and higher than I think, then maybe we'll take a look at that. But I'm still concerned later on there'll be another wave of selling, at least coming by next week, and perhaps into a level 2 bottom. And yet they might just keep on selling for a long time. It really now is boiling down to what are these other countries going to do? And there is some encouraging things. I can see why Trump probably wouldn't want to give up, because some countries are already going to have emergency meetings with him. They're already making deals, and they're making deals like Vietnam's making them so fast they want to sit down and sign the papers right away. All right, so maybe we're going to correct this pretty soon. All right, let's go to the weekly chart. And long-term, minor long-term top, mid-size long-term top met all the minimum targets to kind of prove that to be correct. And I think it's down into June, at least to the last week of May. Now, I suppose the lowest price could come in ahead of it, and then it can't go up much until that bottom's in place. We have to get more ingredients, more things done, okay? And then maybe it turns out to be a long-term bottom, and the market's up until next year and the following year. Problem is, something else could go wrong and knock it right back down by October. And that's probably the latest that this bear market will end and bottom. And downsides all over the map, 30%, 40, 50, 60%, probably no more than 60% this year, okay? Lots of wild, crazy scenarios just because this is something brand new, different with the U.S. and burning things down with the hopes of building something new and greater, okay? Any rate, inside of this, what are we doing? Well, if this truly is a level 1, and this was the level 2, this market is going to be weak right into June. It's barely going to pick its head up. If it does, it'll be brief, fast up moves, which is a characteristic of bear markets, and then it just goes away. But we may slow the pace now to the downside into June. It's oversold enough that the technical suggests it could slow it down, but technical can be wrong, and very emotional markets can be way too soon. Can be just almost as bad as the fundamentals news of not helping out, okay? Any rate, I'm suspicious that wasn't a level 2 bottom 4 weeks ago. And the level 2 bottom should show up no later than next week, April 14th, all right? And can show up, or I had hoped it was going to be last week. So I'm a little concerned, we get a blip up and it's still low or down into next week. And then that should be the latest for a level 2 bottom, all right? And then we're going to get a level 2 rally, but I'm guessing it's not, even if it's huge, it'll be brief and it's right back down again on into a level 1 bottom in June. So this market can still just go lower, but it can give us some problems now that the easy, fast money to the downside has been made for those who are betting on the downside, okay? And hedge funds have sold gigantic amounts of stock off of this stuff, okay? Any rate, so that's what I'm looking for, is maybe this bottoms for level 2 by next week. But I also have to consider maybe it's already bottomed. That might make it even more bearish. Or hold it down better, that there's really no reason to buy this on a long-term basis and for normal intra-year type trading to probably to June. It should probably just left alone, and if we miss the upside, we miss the upside. We need something a little safer, wash things out, try to come up with a more concrete bottom. Now, other things I'm watching for is this bottom back in April of last year. And on the cash market, that is 4953.56. That might be the lowest. By the way, I still see possibility of 4100 to 3900. Blew right past my 5347, okay? And I've had a range of 54 to 5100. We've blown right past that, okay? It is pretty darn bearish. And by the way, even when it goes past those targets, the modeling is even more right. I'm even more right. That's how I look at it, okay? Or at least still right, depending on how you want to look at it, and to be fair to the model and me. All right, any rate, this is very, very, very tricky, very, very gambling, but I think a level 2 bounce is coming this month, but I think there's still more down by June, and I think within the level 2 bounce, there is a chance to bounce the next few days, but I'm afraid it's going right back down next week. Then we get another bounce that'll be the level 2, and that might take a little longer and a little better up move, but then I'm afraid it's just going down again. We're going to have to take this by the hour, which I can't update you that fast, so really we'll just take it day by day here to work the best we can. It feels like it's almost a little too late to be an aggressive seller here, but I don't know for sure because it can just go lower into June and we might be down 60%. It's not quite right here. It's oversold enough to make me want to buy it. It's come down to some of the better targets here history-wise to make me want to buy it, but the patterns aren't right. The news isn't changing other than there's a little bit of hope that some of these countries are going to step forward and say, all right, Trump, what do you want? Let's make a deal. And that may help to provide a little relief in the market, but we also don't know how well that's going to work. How long is that going to take to work? To turn this around, okay? So I guess I don't have much else for insight here. This is the S&P 500 weighted, this is the percent stocks above the 200-day average, and it's crashing down historical lows. This is a weekly chart. I wanted it to go lower. I got it, but I didn't realize the price would be this fast down, even though I was thinking of a 1987 crash. So far, I'm very pleased how the model's keeping up intraday to intra-week to intra-month, but the level 3 didn't work out as good for me as in 2020, so the overall accuracy has slipped a little compared to 2020's, but still suggests we've actually been in an orderly meltdown crashing market here. Still, that it's a little bit understandable and not total flat out panic of people jumping off a cliff or something like that. All right, I don't think the VIX, of course, exploded big time at first. It was dragging its feet, and I thought it wasn't working because they were liquidating. Now what's going on is they are using options markets to bet on the downside. Some may be even dumping stocks and buying options to bet on the upside so they can just spend a little money and hope it bottoms. But if it doesn't work, they don't get their money back, but they didn't lose as much as they stayed with their stocks. This is now the kind of panic we need here off of the VIX, all right? But I'm not picking up signs that I wouldn't be surprised that looking out to June, the VIX actually comes down, whereas the stock market goes lower still. It's just we calm things down. I think a lot of this shock and this speed to sell is going to start going away. But I got a feeling this market is still bearish into June is my best stance. And even some of the banks here still getting hit as well, okay? So it's ugly, and here's the monthly S&P 500, and this is the history back to the 2008-2009 financial crisis. And there it is. You look at it and you say, hey, we've been through this many times before. Well, it was some of the fastest in many, many years. It is a little like 1987 crash. And then when you zoom in, it's still, the sad thing is there's still lots of downside that could be on the table, but nobody knows for sure. All right, that's your update here. I don't have much else to say. I guess I'll close out with the 6-hour chart in the futures, and I currently got it down 102 points in the futures market. And like I say, I think this market should pick its head up this week, but I'm nervous of being down next week. And I think this market, I am nervous it's going to be down today into tomorrow, but it doesn't have to. I'm more confident of the idea that it ought to be up sometime this week and then down in the next week. And then what we have to reevaluate is how much can it pick its head up later this month, because I'm concerned there's more bad news coming in May, June, but I'm also wondering, is it bad news that really isn't new news? and people just don't really want to sell that much in the June. And then look at all, most of this selling is done, and we're going to start thinking and working a little smarter and better here as a nation, as a world. But at any rate, yeah, I don't trust it. It can go down into tomorrow, next day, it can go down today. But in theory, it ought to pick its head up a little bit this week, but I'm just nervous down next week. And even if it does pick its head up later this month, I'm still nervous of more problems going out in the June. Even if you could prove to me it's gone the lowest it's going to go, I'm nervous it can't go up much at all till after some kind of bottom at the end of May on into June. All right, past results are not necessarily indicative of future results. I've given you a little twist and turns where we're going next day or two for this week and the next, but nothing's really changed that we may well be in a bear market until June. So keep that in mind. That's how the news is going to flow too, good and bad. Thank you and have a great day. And don't forget to go to criticalpointpod.com, sign up for the new subscription. The old subscriptions are going away, and that other website is going away. All we're going to have is the criticalpointpod.com. Thank you.